You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Do you see the action in these juniors? It's telling me that your retail investor is finally coming back into this sector. Generalist investor left this sector in 2011 and most of them have not returned. I mean, they really haven't had a reason to return because general equities have done so well. So now with the gold price knocking on all-time highs in US dollars, it's already broken out in every other major currency to all-time highs. So it's only a matter of time that these juniors really start to get going, and we're still in the early stages.
Welcome back to Mining Stock Education. I'm your host, Bill Powers. Thank you again for tuning in. I sincerely appreciate your listenership. And if you listen on an audio podcast form rather than YouTube, I'd appreciate it if you would rate and review the show. It helps the algorithms introduce this show to more possible investors and listeners, and I would appreciate that. Well, I'm joined again today with my friend David Erfle, the Junior Miner Junky. Website, if you're not familiar, is JuniorMinerJunky.com. David is a self-taught, self-directed private investor who also runs a subscription service. I first interviewed David early on in this podcast back in 2017, and since that time, through our interviews and friendship, David has probably been the most influential person on how I view this sector and how I approach investing in junior resources. So with that introduction, David, welcome back onto the program. And last time we talked, it was be right and sit tight. Is that still the word to the investors listening to us?
Oh, absolutely, Bill. Thank you for that very nice introduction. Yes, it's great to be back on your show again. It's absolutely be right and sit tight time. A good example is today, where the sector is basically flat. I see the GDX is flat right now, but many of the juniors that I follow and some that I own are up over double digits, as we're seeing large amounts of capital coming into these juniors now. And as far as the move is concerned, we had 130% move up in the GDX in 10 weeks. That went through a mild consolidation. Once it broke out above 30, there was a gap in the breakout on a daily basis, and that gap has been tested 3 times. And each time that gap was tested, we saw heavy buying coming in, which sparked intraday reversals to the upside. And just last week, we had a weekly gap in the GDX, which might be a breakaway gap here. And that gap was tested 3 times on a daily basis. And with the gold price knocking on the $1,800 door here as we go into a quarterly close. As far as the gold price in dollars is concerned, we've never had a quarterly close above $1,800 an ounce. The highest quarterly close we had back in 2011 was $1,772, and right now it's trading above $1,780. And if we have a quarterly close above $1,772 tomorrow on Tuesday, then we'll have an all-time high quarterly close. And you see the action in these juniors, it's telling me that your retail investor is finally coming back into this sector, Bill. I mean, your generalist investor left this sector in 2011 and most of them have not returned. I mean, they really haven't had a reason to return because general equities have done so well. So now with the gold price knocking on all-time highs in US dollars, it's already broken out in every other major currency to all-time highs. So it's only a matter of time that these juniors really start to get going, and we're still in the early stages. So absolutely, it's be right, sit tight. You get into these, you scale into long-term holding positions, and you don't trade them. You just wait until the targets are hit in the GDX and GDXJ. And the breakout target in GDX is 50. And the breakout target in GDXJ, once it breaks out, the GDXJ has not broken out of its 7-year base yet. It quietly made a 4-year high, closing high on Friday. So we had a weekly close, a 4-year weekly closing high on Friday in the GDXJ. And like I said, it was done quietly because it wasn't done on huge volume, and it doesn't really stick out. So once we have the GDXJ close on a weekly basis above 50, then that will signal that the GDXJ has broken out. And the way some of these juniors are trading, some of these juniors are already breaking out to multi-year highs. So it's only a matter of time that the GDXJ does as well. And the measured target for the GDXJ, once it breaks out of a 7-year base above 50, is 90. So you want to get into these things, and you want to basically do as much research as you possibly can. If you don't have the time to do the research, you can subscribe to a newsletter like mine, or there are others that are just as good as mine is. And if you need some help in these things, and you scale into them and you don't trade them, because basically, Bill, junior resource speculators like myself, we've basically been trading amongst ourselves for the past 10 years, waiting for this opportunity that brings the retail investor into our sector. So once that takes place, then you're really going to start to see some of these things take off.
You mentioned don't trade, Dave, and for U.S. investors like ourselves, if we do a trade less than 365 days within the same year, we buy and sell a stock, where we are taxed at a higher rate than if we hold it a year and a day, and we sell it after we hold it for a year. So then taxation comes into our mindset when we're thinking about when to exit a certain stock. But I heard a microcap investor who doesn't focus on the resource sector say that every time he held a microcap stock for the purposes of being taxed according to the long-term rate rather than the short-term rate, he ended up not making more money. I mean, what would be your response to that comment?
It all depends on where you were in the cycle in the bull market. I believe that we're in the early stages of a bull market here in the mining cycle, and I expect the cycle to last at least another 2 to 3 years. So during the past 10 years, yes, I mean, it's been difficult to hold something for a long time to get a long-term gain until 2016, when we had that major bottom in 2016, January of 2016. I think that the GDX was down almost 85% from 2011 to January 2016. And we had that initial short covering move. It lasted only 6 months. And basically it was based on short covering, and it also got a lot of speculators into the sector, but it only lasted 6 months. And we spent the last 4 years consolidating that move. That move, I think it was about 160%. It went up in 6 months. So that move has now been consolidated, and now we've broken out of these 7-year bases. And it was 6.5-year base in the gold price last June, and now a 7-year base was broken out of the GDXJ in April. And now I think we're just days away from it taking place in the GDXJ.
We'll be right back after this word from our sponsor. Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to OsinoResources.com. That's OsinoResources.com. I remember when we spoke at the Beaver Creek Precious Metals Summit last September 2019, you were saying that a lot of institutions were still cautious about deploying their money into this sector, but now it seems like they're jumping at any great opportunity. We see O3 Mining raises $40 million. Osino, after 6 months after raising, is going to raise up to $17 million, even though they already have a lot of cash. We're seeing quality plays having no problem getting access to money. First part of the question is, what is your observation about what the institutions are doing and how they're feeling? And 2, when you see a company that already has cash that you own, are you happy when they even further polish off the treasury?
Well, it depends on their share price when they do it. Like if you give an example, you just gave an example of Asino, which I am also a shareholder, and I cover the stock in my newsletter. That transaction was perfectly timed. When they announced it, their stock hit an all-time high, had already hit an all-time high, and they only had to offer a half a warrant for a year. So when you see something like that, I mean, as an investor, I knew they already were cashed up for the rest of the year with $10 million, but now this cashes them up through 2021 and into 2022. It gets them to a resource and maybe even a PEA with that kind of cash operating in Namibia, because it's dirt cheap to operate in Namibia. So that $25 million, I'll be speaking with Hea here next Friday, and I'll find out more. But yeah, when you see something like that, then you're happy, and you also see the market reaction to it, which was positive. You see these bought deals. They're normally in a bear market, dilution finances are sold. I mean, pretty much no matter who it is, they're going to get sold. But in bull markets, especially in the early stages of bull markets, once investors see that these management teams that are de-risking these large high margin projects, when they see the dilution at a good price with good terms, that bought deal or that finance gets bought. And you're seeing that happen a lot here lately. These bought deals and these finances are being bought. And they're also, some of them are even being offered without a warrant. Alexco, which is another company that I own and that I cover in my newsletter, they announced a 20 million bought deal finance without a warrant. And then 2 hours later, it was upsized to 26 million. So, and on the same day, they got the water license they've been waiting for the past few years. So their property is now fully permitted until 2035, and they're fully financed to go into production now by the end of the year. So when as an investor or a speculator that is not invested in the stock yet, when you see something like that, that's very positive, and that's a stock you want to get into, especially if you see weakness on the deal. It's a lower risk entry point.
For the investors listening to us that don't do private placements or are not able to do private placements, when they see these bought deals or these financing offered, you mentioned a good company with a good deal, the share price goes up after the announcement. We saw that with GR Silver Mining also recently, another example. What happens if the stock falls? Should that be a red flag in this market for the retail investors listening to us?
It depends. It depends on where the stock was trading when it happened. You know, if the stock had made a huge run, maybe it was up 150% or so, and in a short amount of time, and it was announced. Like, I can give you an example. Cisco Mining announced a 150 million bought deal, which cashes the company up to 500 million fully diluted in cash once it closed at 177 million a few weeks later. That was sold. I mean, the stock had already moved up a lot, and 177 million is quite a bit of dilution. So all that does, though, is gives the investors waiting on the sidelines to possibly take a position in a stock like that a better entry point, because this is a company that controls a 5 million ounce deposit with a head grade of 6.5 grams per ton in one of the best jurisdictions in the world, and they've got 22 drill rigs right now on site. Cisco is known for fast tracking their projects, and they've already got the pre-production, the pre-construction capital in the bank with 500 million fully diluted cash already. So when you see something like that, that is a lower risk entry point on a company that's got a pretty good chance of being taken over, within the next 18 to 24 months.
Dave, retail investors often in this sector can have a disadvantage to accredited investors that do the private placements, but I know from looking over your shoulder since the inception of your newsletter, where I get to see what you're buying and selling both in the open market and in private placements, you actually do the majority of your purchases in the open market. And with that being said, what could you share and how could you encourage the retail investors listening to us about how they can still succeed even if they're not an accredited investor?
Oh yeah, I mean, it's especially now. I mean, it's the sector has moved up quite a bit over the past few months, but still these juniors are still massively undervalued. So you don't really need to have a warrant to do well in this sector right now. And as you know, as a U.S. investor, they make it very difficult for us in private placements. They keep adding these special rules for U.S. investors. The latest one is have sold and will sell legend removal, because as a U.S. investor, you have to have the legend remain on the stock, and when you do the private placement, and then you have to have it removed before you sell the stock. And a have sold legend means you have to sell the entire position to get the legend removed. So if you've, let's say your 4 months and a day hold comes off, you have to wait an extra month or so to get the legend removed, and then you have to sell the entire position to get the legend removed. Before, they had will sell legend removal process where you only had to sell a few hundred shares, just a small amount, to get the legend removed. So they're making it increasingly difficult for U.S. investors to take part in these private places. Why they're doing this, I don't know. They don't want our money, which it seems to me that that's the case. I don't know why, but they're just making it increasingly more difficult. So I don't participate in that many private placements anymore because of this. But if a private placement is done through my brokerage, which is Sprott, if they broker the finance, then I will consider it because the fees are a lot less. And if there's a will sell legend instead of a have sold legend, then I might participate. But the private placement has to be extremely attractive for me nowadays to participate.
Mm-hmm. And you buy a lot of your stocks on the OTC as a U.S. investor also, don't you?
Right. Yes, because the companies that I invest in, they're liquid enough for me to take large positions.
Yeah, that's something key to point out. You can't open an interactive broker's account. I do have one of those. You can trade directly on the TSXV, but I also have a TD Ameritrade account, which allows me to buy in the OTC. And like you said, Dave, I kind of look at the liquidity and see what would make more sense for a potential purchase. When it comes to Great Bear Resources, this has been probably one of the biggest, if not the biggest, winners in the junior mining sector, the poster child for the last 2 years. Goes from 50 cents, it's closing in on $20 a share. We're talking about a 40-fold gain in 2 years. What's your thoughts on this company at this point? And, as an investor, if you were in at 50 cents, when is enough enough? Should you be taking it all off the table at this point?
Wow, if it was me. This is unfortunately one that I didn't get into. I've got my own story of Great Bear that I don't want to bore you with, but yeah, I mean, if I had that kind of gain, I did have somewhat of a large gain like that in a company called Novo Resources, and I'm completely out now. I did really well with the stock, and I figure there's better value elsewhere for some of that money. So and as far as Great Bear is concerned, I don't even think they've defined a resource yet.
No.
So a 40-fold increase without defining a resource, I mean, they've done everything right over there. I mean, they kept the share structure tight. They raised money at the right time. They had a very good marketing campaign. They're in a fantastic district, which is the Red Lake district. So they've done everything right over there. But I fully expect to be many more stories like that coming out of this market. By the time we get into a full-blown bull market, we're still not even there yet. We're still in the early stages here. So I fully expect to hear about and hopefully be involved with many more of those stories.
Yep, me too. And that's why we take the risks. This is a high-risk, high-reward sector, and we're trying to seek out those 40-fold winners. But, a 3 to 5-fold winner isn't bad either. So, Dave, before I let you go here, I'd like to get your thoughts on the service companies. I've been presented with and received some inquiries from listeners about, Bill, what about the service sector, the sector that services and provides services to the mining sector? That's going to rise when all these mining companies start drilling more and are more profitable. Where are the opportunities in the service sector? It may not go 40-fold, but it could easily go 3 or 5-fold over a period of years. What are your thoughts here, Dave?
Well, absolutely. I mean, during the gold rush of the 1800s, the people that made the most money were the people that sold the equipment to mine.
Yes.
So I fully expect that to happen as well. But you're asking the wrong person. That's not really my area of expertise.
You're the junior miner junkie, not the junior miner supplier junkie.
Exactly. So, I'm probably not the best person to ask that question. I got my hands full with these juniors here, and as you know, I own and cover 30, and I don't like to own any more than that. And then I have 20 more that I've researched on a watch list. So basically, I cover 50 companies, even though I own shares in 27 of them, and I have warrants in 3 others. But like I said, I've got my hands full there with junior miners here.
Well, we'll leave the conversation there, Dave. We'll be touching base again, having you on the show in a month. If you're not familiar with Dave's service, please head on over to JuniorMinerJunky.com. Also get on Dave's free email list, and you'll get emailed every Friday evening or afternoon, depending on where you live, his weekly editorial that he also posts at Kitco.com. Dave, as always, appreciate your insights. Thanks for coming on today's show.
Thanks for having me, Bill. Anytime.